What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome back to What's Making Headlines. It's Annie, Ben and Will with you today, giving you the wrap-up of what's been happening in the news this week. Another busy week. Still some fallout, I think, actually, from the rate decision that we had last week for July, the surprise no-move decision. It's weird when we have a lot of news based on nothing happening, but that's exactly what happened last week when nothing happened at the RBA and everyone was shocked by it. And we've had a few more things coming through the last couple of days and sort of weeks since then about what's been going on, what the anticipation is now for the August rate cut. But been fairly busy week this week. Had a few events on, been out and about. Will, you went over to the CDR Summit this week. How was that?
Yeah, it was brilliant. Really good. Loads about kind of open banking, AI. I'd probably say, so the best kind of panel for brokers, there was a really good one. And it had chaired by Naveen Alawalia from the MFAA. There was Renee Blevin, who's head of broker at NextGen. Nicole Devon, who is exec general for product and tech at Mortgage Choice. Ben Rumming, who's Chief Data Officer at Teachers Mutual, and Kevin Quack, who is a broker at MLS Finance.
What did they chat about?
I mean, it was really interesting. Basically, I would say the big two takeaways, they kind of spoke about why has uptake not been stronger amongst brokers for open banking, given all the benefits, and lots around that. I think one of the big things was just awareness. Brokers weren't completely aware of how much time saving, hassle, energy you could save, and customers as well. There were concerns about kind of privacy and data security. And then there was a really good question to end on. Naveen asked basically if you could wave a magic wand and change one thing to the kind of CDR regime, how would you accelerate usage for brokers? And the answers were better lender adoption and lenders changing their policies, increased awareness, unsurprisingly, and forcing kind of legislative changes specifically around screen scraping.
Oh, I bet that was Renee that said that.
Yes. Yeah. So really good, interesting feedback. And yeah, it was good to hear kind of a mix of backgrounds, what they thought of it.
Yeah, and I think because we have had, as you know, it's been ticking along for years, open banking, but really kind of only starting to see more wider adoption now. NextGen recently launched their open banking for brokers more broadly. So I think we will see much more adoption moving forward now that that's kind of been made available to the whole market. And I know that they've been working with different aggregators and lenders as well to try and embed open banking into the different CRM platforms. But yeah, the open banking for brokers platform from NextGen, I think it's free as well. So it'll be really interesting to see how many brokers start using it, if clients are willing to give their broker access to their open banking data through the trusted advisor model, and hopefully see that ticking through. And I think this is all kind of part of the sort of next phase of mortgages and innovation in mortgages, and looking at, well, will open banking do? Will we see many more lenders actually start embedding open banking offers into things like their banking apps? You know, I can imagine a couple of the big banks that might have, you know, a normal banking app for a consumer could start sort of building in open banking tech and being like, based on what we can see, here's a provisional offer for you for a home loan, which might be a bit of a worry. For brokers, looking at if that does start to happen, there might be more direct flows going through. That's not the only bit of innovation we had this week in terms of what's happening in the mortgages space. There's lots of chatter around crypto. This was an interesting story, Will, that you wrote. So somebody coming up with a new product later this year, still not quite in market, I don't think, but looking at using crypto for mortgages. How's that going to work?
Yeah, so essentially the product, which, as you said, hasn't launched yet. They said they've had a soft launch, but it would be, it's basically two parts to the product. The first would be a Bitcoin loan. So you would hand over Bitcoin, and then you could use that. So a minimum of 25 grand, you'd use that for a deposit. And then the second part of the product would be more like a traditional mortgage with a traditional lender.
So basically, you've got 25 grand worth of Bitcoin,
yeah,
and you go to this company and say, take my Bitcoin, give me some money.
Yeah.
And then they give you enough money for your deposit. And then you go back to a normal mortgage lender and say, now I've got enough money for my deposit. can you cover the rest of the mortgage? Is that right?
Pretty much, yeah. So the lender would have to be approved by them, and they've only got one on board at the moment, but that's how it would work.
Right.
And then the big question would be, and we asked them, who handles the risk? So if the price of Bitcoin obviously drops, how is that loan? What happens to the loan? Or if it goes up, who gains?
Yeah, because you don't want to have to take out a loan and then suddenly they'll be like, oh, actually, Bitcoin's tanked. You owe us 25 grand in actual cash.
Yeah. It is so the wording they used was that users maintain their Bitcoin market exposure. Obviously, that cuts both ways. So if the value increases, they said borrowers can choose to pay down faster using the appreciated crypto, or if it plummets, then Block Earner, the company that launches the product, they reserve the right to call back a portion of the loan after 30 days. They didn't say how much a portion would be, but they said not all of it. So it could be lots. And they basically said, we asked what kind of protections are in place for borrowers. They said a combination of over-collateralization, real-time alerts, a 30-day cure period was how they phrased it. So I guess some question marks over how it would work in practice.
Yeah, and I think the regulators will have a little look at this as well, because cryptos, I don't think it's yet regulated. I know that the government started talking about regulating crypto assets back in 2023. I'm not sure if that's actually passed through. I haven't been following the crypto legislation actually as closely as I probably should have done. But yeah, really fascinating to see how that would work. And I think part of the reason that Block Earner, the company that's launching it, has said that they're doing it is because 1 in 4 Australians supposedly have some form of cryptocurrency, which surprised me. There's 3 of us here. Do either of you have crypto?
I think the person with crypto must be outside the room.
Exactly, with the other ones out.
Yeah.
I think I bought like £50 worth. So it's probably.
Oh, you actually do?
I bought that years ago, but it must be like I barely have any. And the fact I don't know, I think, is damning. Yeah.
So much. Do you know what kind of currency you've got?
It was Bitcoin. Yeah.
Was it? Maybe you're a billionaire.
I'll
you just
retire.
Don't know. Yeah. Wow, you should probably check that out.
Yeah, probably
Well,
should.
there you go. We do have 1 in 4 in this room, and 1 in 3.
1 in 3, yeah.
So yeah, I thought that was really interesting. They was talking about the fact that because it's so prevalent now, and obviously house prices in Australia being so high, they were like, well, how can we provide new ways of helping people get into the property market? And this is, I think, an interesting one, looking at using crypto to do that for the deposit. I'm not sure about it. I'm a bit like, I want to see what the protections are. I mean, there's a lot of whenever new stuff comes along, you wanted to make sure that everything's sort of in the correct boxes. And I think you talked to a couple of brokers as well, Will, about this for the story.
Yeah.
What was the sort of sentiment from the broker channel? Would they be using it?
So yeah, we got a kind of sense of what they thought of the product and what they thought of crypto and mortgages more broadly. In terms of kind of their broader feelings, I would say generally quite open to considering it, and they thought it's a growing space. It's good for younger borrowers, especially getting into the market. They said the tech's interesting, always good to embrace innovation. The number one feedback was legislation needs to be stronger, and they wouldn't touch it unless there was the right kind of guardrails in place. The other one obviously is volatility, like how does it work in practice? I think the timing of this is interesting, that Bitcoin reached an all-time high this week and all these announcements come out, and then when it tanks, everything goes quiet.
Yeah.
Like
nothing to see here. Well, it hasn't actually officially launched. I think they said they were going to launch it later this year. This is sort of a soft launch at the moment. They announced it, and probably that's why, because of the timing. But it's not the only. I mean, in America, we saw Freddie Mac and Fannie Mae now accepting crypto as an asset, which I thought was really interesting, seeing how the American market is doing it. And again, cryptocurrency over there is so massive, and obviously much, much larger market in the US. So kind of having this conversation across the globe now, people being like, is crypto a proper asset? Will lenders accept it as a security? But brokers, I think kind of saying interesting, but again, worried about the regulation and the protections for consumers, I think.
Yeah, exactly. I think with the US thing, because they've said they're developing frameworks, but they haven't actually gone into it yet. Say if you were using crypto as an asset and you lost 25% of your value overnight, how does that work out about the value of your house or the value of your mortgage?
Yeah, because it'd be the same way if you wanted to put part of your stock market, your share market. What is it called? Your portfolio. Thank you. I was like, what is the word for this? If you had like a portfolio of shares and you were trying to borrow against that, I think it'd be exactly the same thing.
Yeah, exactly.
We'll take a quick break here. When we come back, we're talking a little bit more about what's been happening in the home loan space and what lenders, brokers are using at the moment, and we'll get into that just after this. So this week we had some more information come through from Agile Market Intelligence with the release of the latest broker pulse survey, which they do each month, of our broker readers, of their broker readers, I should say, and looking at what kind of lenders they've been using over the month, what sort of things they're seeing, what are they liking, what are they not. And I think one of the trends that we've spotted from not just this piece of information this week, but another data set that came out from AFG was that mortgage demand really rising at the big four banks, and brokers, I think, increasingly using the big four, which I thought was fairly interesting. We had seen a lot more movement away from the big four in the last year or so as the non-majors and the non-banks really took market share, particularly around higher servicing requirements. We saw sort of a flow away from the big four, but now people coming back. Will, you wrote the story. What are they doing? What's happening?
Exactly that. So essentially usage of the big four amongst brokers is going up. ANZ for June took the lead as the most commonly used lender. 52% of brokers used them. And the same at Westpac. Generally, we saw usage go up, which I thought was interesting. The other thing that's definitely worth saying, so ratings from brokers for June for the big four, all of them improved. And they all comfortably beat the average score for lenders. So the average was 69. And a lot of the majors were getting in the 80s, so really strong scores. Not as good as, say, Macquarie was 97, ME Bank 96. So not the top level, but certainly improving. And it kind of, I guess that anecdotally, we don't always get the best feedback from brokers about the big four, about service, but actually...
we get good feedback.
Good feedback.
But not the most positive feedback.
That's it. But actually, if you look at the data, they get quite good results and way better than... there's definitely a clear upward trend of what brokers think of the big four in terms of usage. So interesting findings.
Yeah, and I think the big four have been doing a lot this year. We've seen lots of tweaks to policy. We've seen a lot more announcements. They're kind of wanting to adopt a lot more of the, I guess, market share back that they've lost. So things like self-employed lending, kind of really focusing on that. They're doing kind of little tweaks on different areas of policy where they think they can kind of take in a bit more share and maybe increase their risk appetite. So whether that's like on construction lending, which they'd pulled back on a lot the last, really 5 years, looking at sort of tweaking those, or CBA with its recent prefab sort of policy, that kind of really interesting seeing what they're doing. And I think this builds on what we were talking about last week with the major third-party lending report, which came out. It's our cover story for the July edition of the magazine, looking at what brokers thought about the lenders they used across the whole entire year, not just over the month. And in that, again, we were seeing major bank ratings increase, like similar to the monthly broker pulse survey. And if you remember, in that third-party lending report, Westpac was the most highly rated lender from the big four, which, again, seeing really increasing use. And I think in the broker pulse survey, as you said there, Will, like more brokers using them and having higher ranked experiences with them as well. So that, I thought that was pretty interesting.
Yeah.
And the AFG figures we kind of talked about as well. I mean, seeing those lodgement figures come out this week for is it the June quarter?
Yes, yeah.
Yeah, for their mortgage index, showing again record volumes being written by AFG brokers, both in terms of dollar value, but also really high numbers of loans being written too. I think that was pretty interesting because, again, we could see where brokers were sending their loans. And I think similarly, the share that broke of major bank mortgages for the June quarter was increasing.
Yes. I mean, exactly the same trend, really. In fact, I'd say at AFG even stronger in terms of usage among the big four, so record for them for the end of year quarter. I mean, I don't think it's a coincidence that the ratings are going up and then the usage goes up with that.
Yeah. And I think also looking more broadly across the landscape, I mean, we did also see from the AFG data that the average mortgage size is going up, obviously as house prices increase. But interesting to see where they're going up. Like, they're kind of not really in the place you'd expect necessarily. In fact, for the June quarter, according to the loans lodged by AFG brokers, Queensland and WA were the only two states where the mortgage size rose quarter on quarter. Everyone else either sort of held firm or actually dropped. So I think Queensland, the average mortgage size rose 2.2% in the June quarter, according to AFG Brokers. And that rose up to around $648,000. While in WA, the average mortgage size increased 2.7% to just under $600,000. So that was pretty interesting. Lodgements across the board are up, though, of course. Everyone's writing loans left, right and centre because we're in a rate easing cycle, and expectations are that next month we might get another rate cut, which will, of course, fuel even further demand. Looking at the lenders, though, we did also hear from LMG CEO Ewan Stafford this week. He took to LinkedIn to hit out at a advertising campaign that was running from Unloan, CBA's direct-only lender. And he was sort of saying, he didn't love the wording of it because they are running a reel at the moment where it sort of talks about flicking out the middleman to get a cheaper rate. And he was a bit like, that sounds like you're talking about brokers, and we won't stand for this, basically. So it's great to see him coming out punchy and being like, we stand for brokers. We want people to be able to access a good rate, but also, of course, rate's not everything. We don't have a good mortgage. You want to make sure that you're getting a loan in your best interest. So, yeah, hitting out angrily against that campaign. And I am, expecting to see a couple of other broker comments coming through today following the back of that. Speaking of which, not the only big advertising campaign that caught our eye this week, Ben. I think you were looking at one from Aussie.
Yeah, so Aussie, our listeners would all know about Aussie's new sort of proposition, the find, buy, own proposition, which has seen sort of the brokerage launch all sorts of services like in-house conveyancers, buyers agents, and that kind of thing, a new app that helps people find property and that kind of thing. So they officially launched that to market this week on the 14th of July. So it's everywhere. It's advertisements on bus stops, on TV, YouTube, everywhere.
It's kind of an interesting ad campaign, actually. If I watched the advert for it on YouTube, I think it was, and it's kind of like two people are sinking in quicksand while looking at property. I can't actually remember why they're in quicksand. Is it like that they're kind of overwhelmed?
What Aussie was saying is like the research they did from home buyers, I think they were saying 65% of home buyers sort of feel very stuck at certain stages of the home buying journey. So this new proposition is, designed to make different elements that can sort of feel very difficult, particularly if you're doing it for the first time, a little bit easier.
Yeah, okay, so helping you get out of the quicksand.
Yes.
Safe land.
Yeah.
So I think in the video it's sort of like a couple sinking in quicksand. They're looking at property and they're feeling like overwhelmed with their mortgage, and then there's a sort of Aussie person, Indiana Jones style, comes to the rescue. And I think like the advertising campaign was actually saying they did kind of do that as a nod to the Will Save You ad campaign that obviously was super popular back in the day with John Simond from the 90s. So I think, that we were sort of saying the similar messaging of like Aussie will save you. I think that's quite a nice sort of homage to their background. Yeah,
and I mean, we've talked a lot to Aussie about this campaign and sort of the idea behind the proposition. There was a good podcast in one of our In Focus podcasts with Brad Cram, Aussie's Chief Distribution Officer, earlier this year. He was sort of talking about thinking about today's property experience. Brokers do a really great job, but there are a lot of third parties involved, a lot of handoffs, and the whole idea behind this whole find, buy, own thing is to make it a little bit more streamlined so you don't have to go into another building, I suppose.
You can all be under one roof or at least on one platform, so you can kind of connect with everyone, which makes sense. And I think we're seeing a lot of brokers do this themselves. We've seen a lot of brokers partner up with conveyancers or even bring conveyancing in-house. We've seen lots of brokers bring buyer's agency services in-house or property management in-house. So I think it makes sense to have that kind of oversight of the whole ecosystem, because it could be frustrating. I can imagine if you're a broker and you're like, I've done all my work and now it's sort of off into the ether with a conveyancer or with a buyer's agent and it's out of my hands. But they typically would like to know, like, what is happening so that this loan actually settles. So it sort of makes sense to me to bring that all together. But yeah, if you haven't seen those ads, I'm sure they'll be coming to a bus stop or a TV or a radio wave near you. They seem to be everywhere at the moment.
Yeah.
We'll take a quick break here. When we come back, we'll just be chatting through some of the things that we're seeing in terms of the housing market more broadly, and we'll get into that just after this. We were speaking earlier, Will, about the Unloan campaign, and Unloan, of course, part of the Commonwealth Bank of Australia's group, CBA group, so looking at their sort of direct lending campaign. But we also did hear from the major bank itself this week, because we had some submissions being released from the Productivity Commission's billion reviews into productivity. I think they had like 5 different reviews
5
on?
separate inquiries into productivity.
Yeah.
Essentially, and basically they've published submissions that various bodies and banks have published. And CBA was probably the standout in terms of relevance to brokers.
And they're pretty punchy.
Yeah, they don't hold back, which is interesting. They go into loads of kind of supply side reforms needed to address affordability pressures with stuff like housing. They really stress like the urgency of change from kind of top down from government. Specifically, they said younger Australians, those on lower incomes, they need help with basically economic policy change to help them get on the property ladder if they need to buy property. Interestingly, they said that corporate tax, they didn't support corporate tax cuts, which I did think from a big bank was quite interesting.
Yeah. You think they'd be like, yes, please.
Yeah. But they did call for kind of tax reform, more to do with kind of income tax. They said the country's tax base was too narrow. Thought that was really interesting. And then, I mean, there were loads of submissions.
And I think this is also really interesting because the same week we've been also hearing, I don't know if you read the story from the ABC, they were accidentally sent some files from Treasury that had things in it they shouldn't have seen.
Yeah.
And in it basically was saying the Treasury has been telling the government that their housing target won't be met. So the $1.2 million home target they've put in place for 2029, the Treasury sort of estimates are suggesting you're actually not going to hit that. So we had some commentary from Jim Chalmers. It might have even been on Friday, actually, rather than on Monday this week. But it kind of the fallout from that has filtered through this week. He was talking about the fact that maybe taxes would need to be raised in order to start hitting these targets. Spending cuts might also need to change. And kind of looking at, well, what else does the government need to be doing? And he was sort of out in damage control, I think, a lot of the last early part of this week, talking about, well, what is the government doing? And he's really saying, we need everyone to pull together. We know that we need to work much, much harder to hit these targets that we are aspirationally trying to hit. He did kind of also say, like, don't forget, we are actually still building more houses, though. So he's like, it's not like we're not doing anything. It's like just not necessarily going to get to that target. Speaking of which, Ben, I think we did see some figures this week from the ABS about how many houses are being built. Where are we? What's it looking like?
Yeah, so that pretty much reflects what you said just then. Number of the ABS put out the housing data for the March 2025 quarter. So compared to March 2024, dwelling commencements is up 11.7% to just over 47,000 units, with private houses up 6.3% to over 27,000 and multi-residential up 21.8% to just over 18,000. I think the big thing is the completions sort of remain modest. The ABS figures for the March quarter show that there were 45,000 dwellings completed, which is below, I think, to hit the target we have to complete 57,000. So, yes, it's slightly below.
Is that per quarter? Or
per quarter, yeah.
Okay, wow.
Yeah. Which is actually seems like quite a lot of dwellings, but
it's a punchy target, isn't it?
Yeah, it's high. But I mean, of course, it's high because we have so many people coming into Australia. It's a wonderful country. Why wouldn't you move here? Obviously, Will and I are both immigrants, so yeah, we are advocates for moving to Australia. But we're not alone. There's millions of people wanting to come in, so we're having to find housing somewhere. Lots of chatter around infilling as well. We've seen reforms come through the last year or so, and from the federal sort of level, freeing up, I guess, some of the red tape around what the states and local councils are doing on housing, and seeing more metropolitan areas, particularly those near transport hubs, so train stations and tram lines, I think it is. Lots more sort of rules that are easing up there to try and encourage housing near those things. I think it's about 800 metres to a major transport hub. You can kind of basically build a multi-storey property, which you might not have been able to do before due to local sort of planning rules. So lots more infill happening, and lots of sort of people trying to build a couple of levels on top of their houses, or taking up land and banding together to maybe have a person and their neighbour sell their land so that can be developed. So I think that's been something we've been talking a lot about recently, is being like, where are these houses coming from? And one solution, being like, well, just build up. We'll build up instead of out. Will, Ben, any nice plans for the weekend?
Brisbane for the Lions game.
Oh yeah, that's right. Rugby. That is
really
happening.
Excited. Yeah.
Obviously, you're going to assume you're backing the Lions.
I am, yeah.
Ben, for you?
Not too much. It's my sister's 30th birthday. So,
lovely.
Nice.
Shout out to my sister.
Happy birthday. Happy birthday. That's nice. So what are you going to do for it? Are you going to have a family affair? Are you going to go anywhere?
I think it's going to be a bit of a thing, I think.
Yeah.
But
Big
mostly
shots.
family and friends.
Lovely.
Me standing in the corner.
Yeah. I'm doing Christmas in July tomorrow with some of my friends, so I've actually got to go buy my Secret Santa present because I totally forgot to do that. But yeah, that's something fun, and it's always nice as a Brit to have Christmas when it's actually cold, because it feels weird having a Southern Hemisphere Christmas in December when it's boiling hot. So yeah, looking forward to that. Got my Christmas jumper ready already.
Nice.
Yeah. Anyway, that's it from us. Will, Ben, thanks for your time, and thank you all for tuning in. You can catch us on the What's Making Headlines podcast next week, of course, as usual on Friday afternoons, or check out the Elite Broker, New Broker and In Focus podcast as well on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.